Have you ever, looked at a stock that is just taking an absolute nosedive on any given day?
Oh, just a complete sea of red on your screen.
Right. And you're staring at it and you wonder, is this actually a hidden gold mine?
Yeah, it's a classic dilemma, right?
Yeah.
Like, are you trying to catch a falling knife, or are you actually just buying into a temporary dip before this, massive multi-year run?
Exactly. And that tension, that massive gap between, well, the ugly reality of a stock chart today and this deeply held belief about the future, that is exactly the subject of our deep dive today.
It's a really fascinating one, too.
It is. We are looking at a highly optimistic, honestly unshakable investment thesis regarding Applied Optoelectronics, Inc. Ticker is AAOI.
Right, AAOI. And to really unpack this, we're pulling from a pretty great stack of sources today.
Yeah, what do we have?
So we've got an investor's personal notes laying out their whole bull case. We also have a snapshot of a really volatile trading day that literally just happened yesterday, May 8th.
Super recent.
Yeah. And finally, we have this very specific, almost surgical revenue projection from a guy named Stefan Murray.
Awesome. So the mission for you and me today is to basically decode this investor's logic, right?
Yeah.
We want to figure out why on earth this source is completely ignoring all this red ink, this rocky present-day market, in favor of a massive and highly speculative payoff in the year 2027.
Yeah, that's the big question.
So welcome to the deep dive. Let's get right into the physical reality of what this company actually does. Because before we can even touch those wild financial numbers, we need to know what AOI makes.
And crucially, who is supposedly just lining up to buy it?
Right. Which brings us to this massive analogy our investor source makes. They describe AOI as the, quote, optical version of INTC, Intel.
That is a bold comparison. Intel is a titan.
It really is. And the investor notes that they are scaling capacity from laser fab to assembly, and they make a huge deal out of the fact that it's all made in America.
The domestic angle is huge for them.
Yeah, and then they just casually drop this assumption. They say anything they make is likely to be bought out by hyperscalers.
Just guaranteed demand.
Okay, let's unpack this. Because if Intel historically made the digital brains of computers, like the silicon crunching the ones and zeros, this source is basically arguing that AOI is building the optical nervous system for modern data centers.
That's a great way to put it.
And doing it entirely on American soil. But I have to push back a bit here on that certainty. They claim hyperscalers will just buy anything they make. I mean, is that actually a safe assumption, or is this just a super shaky foundation for the whole thesis?
Well, to see if it's safe, you really have to look at the physical limitations of modern computing. Like, why does a phrase like laser fab to assembly carry so much weight right now?
Right. Why does the market care?
Because the hyperscalers, these are the massive cloud providers, right? Companies running data centers the size of small towns.
Just huge infrastructure.
Exactly. They are hitting a severe physical bottleneck. It's not just about how fast processors can compute anymore. It's about how fast you can actually move that data between the servers.
The traffic jam.
Yes. For decades, everyone used traditional copper wiring to move electrical signals. But when you start pushing terabits of data, especially for AI workloads,
which are everywhere now.
right, pushing electricity through copper at that scale creates massive physical resistance.
It gets hot, right?
Oh, extremely hot. It generates heat, you lose signal over distance, and the cables themselves become incredibly heavy. You literally just hit the physical limits of the metal.
Wow. So you're forced to shift the whole infrastructure over to light.
Exactly. You need transceivers to convert those electrical signals into photons, shooting them across fiber optic cables using lasers. And this is where that made in America manufacturing footprint becomes the whole linchpin of the investor's argument.
Because they aren't just buying parts.
Right. Fab is short for fabrication. By handling everything from the laser fab all the way to final assembly, AOI isn't just ordering cheap commodity components from overseas and snapping them together in some warehouse.
They're building it from scratch.
They're literally growing the semiconductor materials, etching the lasers themselves, and packaging the final units all under one roof.
That's wild. They own the physics of it. I mean, that is a radically different business model than just being an assembler.
It changes everything.
Yeah, because when you're fabricating the lasers, you're dealing with, quantum mechanics and material science. You control your own quality. And by doing it made in America, you totally insulate yourself from all those geopolitical supply chain shocks we've seen lately.
Which have just terrorized the hardware sector,
Yeah.
Controlling your supply chain from the atomic level up to the finished product is so incredibly rare.
And hard to do.
Very. So the investor's logic is that the broader market is just so starved for reliable optical parts right now. Any domestic supplier who can actually make these lasers at scale will find an infinite appetite.
Because the hyperscalers literally can't build their AI infrastructure without them.
Precisely. To this investor, the bottleneck isn't demand. The only bottleneck is just how fast AAOI can get these things off the assembly line.
Okay, but wait. If the hyperscalers are supposedly guaranteed to buy every single optical component they make, why did the broader market absolutely panic on May 8th?
Ah, the reality check.
Right, because looking at the snapshot of the stock chart from yesterday, there is this staggering disconnect between this story of, insatiable demand and what actually happened. Let's look at the numbers.
Let's hear them.
So the stock opened at $173.84. Early on, it pushed up to a high of $177.88, but by our snapshot at 1:13 p.m., it had tumbled down to $145.39.
It's a huge drop.
Down $12.16, that's a 7.72% drop for the day. And the market cap was hovering right around 11.5 to 11.7 billion. But here's where it gets really interesting.
Yeah.
You have this massive intraday plunge, right? A $12 haircut in a few hours. And the investors' notes basically just wave it away.
They don't care at all.
Not at all. They write, quote, current financials don't really matter. And they even point out they were saying the exact same thing when the company's market cap was only $6.49 billion. I mean, how does any rational person justify ignoring a nearly 8% daily drop and just dismissing current financials?
It sounds crazy, right? Yeah. But it speaks to this very specific philosophy of institutional investing. It operates totally divorced from day-to-day volatility.
Totally ignoring the noise.
Exactly.
Yeah.
This investor is anchoring their whole thesis to a macro-level projection. They specifically cite Goldman Sachs' overarching 9x TAM curve.
Total addressable market.
Right, so when you're looking at a projection from Goldman saying the total market for this optical tech is going to expand by a multiple of 9.
Wait, 9 times larger?
Yes. The total pool of money flowing into this specific hardware is going to get 900% bigger. When you believe that, the daily micro movements of the stock just lose all their psychological weight.
I guess a 7% drop is just retail noise if you genuinely think the whole ocean is about to rise by 9x.
That is exactly the perspective. They aren't looking at an 11.5 billion market cap and asking what the company earned last quarter. They're asking what the company could earn when the market finishes that massive expansion.
It really requires this deliberate detachment from the present. Like, they aren't trading the May 8th ticker symbol.
No, they're taking a position on the global infrastructure of the internet years from now.
Right. But, detachment's easy when you're just philosophizing about the future. To actually sit there and believe today's financials don't really matter while your portfolio is dropping 7% in an afternoon.
You need some real proof to hold on to.
Exactly. You need granular proof. You can't just coast on a vague Goldman Sachs TAM curve. You need to know exactly how your specific company is going to capture that new money.
Which is why the investor's notes pivot straight into this highly specific mathematical model for mid-2027.
Ah, this is the Stefan Murray projection.
Yes, from Stefan Murray. And this isn't just some vague guess about general growth. It is a surgical breakdown of revenue by product category.
Let's break down Murray's exact monthly data center transceiver revenue for mid-2027. He segments it all by speed.
Right, the different generations of the tech.
So first, the older legacy tech, the 100G and 400G transceivers, he projects those will generate about 90 million monthly.
Okay, a solid baseline.
Then you have the current heavy hitter, the 800G. He's projecting approximately 217 million monthly for that.
That's a huge jump.
Yeah. And finally, the bleeding edge next-gen stuff, the 1.6T transceivers, those are projected to pull in roughly 164 million monthly.
So when you add all that up,
Murray totals it to about 471 million per month of transceiver revenue. And our investor takes that monthly figure, multiplies it by 3, and gets their golden number. A 1.41 billion quarterly revenue ramp by mid-2027.
that specific product mix really is the engine of their entire valuation model. It shows a really deliberate transition strategy.
They aren't putting all their eggs in one basket.
Exactly. They are mapping out a life cycle where the 800G is carrying the bulk of the revenue, but that 1.6T tech is scaling up fast to be this massive secondary pillar.
So what does this actually mean in practice? It's like a staircase of data speed, right? But moving from 400G to 1.6T isn't just like turning up a dial.
Oh, not at all. It's incredibly difficult.
It's like trying to replace a small local plumbing system with a high-pressure transcontinental pipeline without breaking any valves.
That's a really good analogy.
Thanks. Because when you jump to 1.6 terabits per second, The physical manufacturing tolerances shrink to, like, the atomic level,
The lasers have to fire with just unfathomable precision.
and the heat management alone has to be an engineering nightmare. So Murray's projecting that AOI won't just master that atomic level manufacturing, but they'll be churning out $164 million worth of those units every single month.
At scale.
Yeah. But comparing a hypothetical 1.41 billion quarterly revenue in 2027 against today's market cap of 11.5 billion, I mean, isn't pricing imperfection 3 years out just incredibly risky?
Oh, it's highly risky. A million things can go wrong on an assembly line.
Right.
But what's fascinating here is how the investor uses that exact risk profile to justify the current stock price.
Wait, really? How?
Well, yes, pricing imperfection is dangerous.
Yeah.
But follow their math to its logical conclusion. If you annualize that 1.41 billion quarterly ramp,
You multiply it by 4,
right, you're looking at roughly 5.64 billion in yearly revenue.
generating 5.6 billion in high-margin, vertically integrated hardware sales. That's huge.
And with the market cap currently sitting between 11.5 and 11.7 billion, that means the stock is basically trading at barely 2 times that projected future sales number.
Oh, wow. I see where this is going.
Right. In the tech hardware sector, especially for a company that does everything from laser fabrication to final assembly domestically, a 2x sales multiple is often considered deeply, deeply undervalued.
So the investor looks at the 11.5 billion valuation and thinks, okay, yes, the price has nearly doubled since the 6 billion days.
But it's still dirt cheap to them.
Right, wildly underpriced if Murray's 5.6 billion annual run rate actually happens. They're essentially betting that the market just hasn't fully digested the math yet.
That's exactly their bet.
Yeah.
The market sees a volatile 11.5 billion company. The investor sees a future 5.6 billion a year machine on discount.
But, I mean, this entire model requires absolute flawless execution.
Perfection.
Yeah. You have to believe the legacy 100G and 400G sales won't just evaporate by 2027. You have to believe the 800G rollout captures that massive 217 million middle tier without any supply chain hiccups.
Which is hard enough on its own.
And crucially, you gotta believe that the 1.6T technology actually works outside of a lab, can be mass-produced, and that hyperscalers will actually hand over 164 million a month for it.
And you can't forget the competitive landscape, too.
Oh, right.
3 years is an absolute eternity in semiconductor and optical engineering. You're assuming no other competitor, domestic or international, solves that 1.6T puzzle faster.
Or figures out a way to completely undercut AOI's pricing while keeping the quality up.
Exactly. The whole thesis rests on them maintaining this massive technological and manufacturing moat for 36 straight months in the most aggressive sector of the global economy.
Which really brings us to the ultimate friction point of this deep dive. The investor's logic is technically mathematically sound, provided every single one of those external inputs actually holds true.
If the Goldman Sachs 9x TAM curve is perfectly accurate,
Right. And if Stefan Murray's monthly breakdown manifests exactly as modeled, then yeah, ignoring a 7.72% daily drop is the only rational move.
but it is a skyscraper built on a foundation of massive ifs.
Huge ones.
The conviction required to just hold that position is immense. It really forces you to ask yourself, how much weight do you place on long-term systemic projections versus the very real immediate pain of the daily ticker?
Right. Let's pull all these threads together. So we've explored this deeply held thesis that views AOI not just as a standard parts supplier, but as an optical intel, building an American-made, vertically integrated empire.
From raw laser fabrication to final assembly.
Yep. And we looked at how copper wire is hitting physical limits, forcing data centers to shift to light, which theoretically guarantees this insatiable hyperscaler demand.
And we examined how anchoring to that Goldman Sachs 9x growth projection lets this investor completely dismiss a brutal $12 daily stock drop.
They just view present-day financials as totally irrelevant.
Entirely irrelevant to the long-term goal.
And finally, we broke down the exact math fueling that confidence. Murray's meticulous 471 million monthly revenue model requiring, atomic-level precision across all those speeds to create a 1.41 billion quarterly ramp by 2027.
It really is a masterclass in how certain investors will just blindly walk through today's fire because they are so certain of tomorrow's math.
It fundamentally challenges how you interpret risk.
Yeah, is the real risk losing 7% on a random Tuesday? Or is it missing out on a vertically integrated supplier capturing a 9x market boom?
Which is exactly why this deep dive matters for you. When you evaluate your own financial decisions or you're reading about market volatility, like how are you processing that?
Are you getting shaken out of your positions by short-term red ink?
Right. Or are you able to look past those daily noisy charts and identify the underlying multi-year TAM curves? Are you investing in the daily reality or the 2027 projection?
Balancing the immediate data of today with the theoretical potential of the future? That is the core challenge of any strategic analysis.
Absolutely. But I do want to leave you with one final provocative thought that builds on everything we've uncovered. This entire thesis relies on the assumption that hyperscalers will just smoothly, predictably, buy every optical component AOI makes for the next 3 years.
All the way to those 1.6 terabit speeds.
Right. But what happens if the AI and data center infrastructure bubble just pops before we ever even reach mid-2027?
Or consider a total paradigm shift. What if a radically different, non-optical technology disrupts data transfer completely?
Yeah, technological evolution rarely follows a perfectly predictable linear spreadsheet, you know?
Never does.
Exactly. If you successfully build the ultimate highly specialized made-in-America laser factory for a very specific future, but the tech industry suddenly pivots, who is left holding the bag?
It's a scary thought.
So next time you see a stock tumbling on your screen and you wonder if it's a hidden gold mine, just remember to look at the foundation of those projections. Sometimes you really are buying the dip of a lifetime. And sometimes a falling knife is just a falling knife. Thanks for joining us on this deep dive.